the speculative nature of gold that doesn't yield interest isn't all that attractive, or isn't as attractive, I should say. When returns go down to 2%, or we can recall the days just a few years ago when, if you got 0.5% in a CD, that was a good return. When you have low interest rates, gold becomes a lot more attractive and the allure becomes more present.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. We got one of our favorite guests back on with us. It's been a while. Gary Wagner, thegoldforecast.com. We're going to go over what's doing with gold prices, whether you go all in or whether you wait. When will the time be right? Make sure you check out Gary's site, thegoldforecast.com. Questions, comments, KL@kerrylutz.com. All are answered. Gary, it's great to have you back on the show. It's been a while. A lot has happened. Gold trading at or near all-time highs. Silver, not so much, but silver is starting to make the long-awaited move. But the question is, are we all going to be breathing by the time silver makes a new high?
Thanks so much for having me. It has been a while, and it is great to be back, Kerry. Thank you.
Sure. So where are we heading here? Let's see some charts. You're the master of the precious metals charts.
Absolutely. I'm going to go ahead and pull up a gold chart for us. And this is a daily candlestick chart of gold. And I've got it starting at the lows that came in back in October. And to just think, not even a year ago, we were looking at $1,900 silver. We went through a market that kind of traded sideways at the beginning of the year, but really took off in February, hit the first of two all-time record highs. The second came in May, and now we're back to a support level of right around $2,300 per ounce. And that's after watching gold correct from about $2,450. And this is gold futures that we are looking at a little bit, priced a little bit above spot pricing. It has been a phenomenal market, and the Federal Reserve has not implemented its first rate cut, because I believe what's going to happen is there's a very low probability that they're going to implement a rate cut at the FOMC meeting this month. Very little. I think it's almost a 96% probability of keeping them where they're at. But it goes up to almost 70% in September. And the key to me is not that they're going to make a rate cut in September, but when they do, that will signal a series of rate cuts. Because if you recall, any of the most recent dot plots that are included in the SEP, the Summary of Economic Projections, well, they were looking for 3 rate cuts this year, now 2. Further rate cuts next year, and then 2026 to normalize rates. And so if they're going to take their Fed funds rate from between 5.25% and 5.5% where they are now, down to a normalized rate, which could be 2.5% rather than 2, but nonetheless, that's a big drop, and that will really take gold into new unheard of territory in terms of new all-time record high pricing.
All right. Fascinating. So, like they always said, inflation doesn't pick up, not with low interest rates, but when they raise interest rates, inflation starts picking up because then the banks make more loans and private money creation takes off. But this time it's a little bit different, isn't it?
Well, absolutely. And realize that it's different because of the environment that got us here, which started with the pandemic, then supply chain bottlenecks, all kinds of issues from the United States basically shutting down its workforce for a year and a half, and then rebuilding back into a normalized state. And so because of that, you had a unique scenario that got us here. So you have a unique set of circumstances that unfolded because of that.
Hey, I would just say that Florida wasn't shut down as much as the rest of the world or the country. Here we were shut down, I think, about 6 weeks till somebody realized that, hey, half the state's going to go bankrupt if we don't start back to work shortly. So, but in any event, I totally agree with your analysis of it. All right. So what else do we have here? So when can we look forward, do you think? When's the rate cut? They got to have one by the end of the year. I'm shocked that they're not doing it because of the political season here. One time Alan Abelson, the late great editor of Barron's, wrote that the Federal Reserve is doing what it does best, which is getting a president reelected. And they seem to have taken a hands-off approach here, Gary.
I would hope that they would. They've got more serious problems, although that's a very serious problem in terms of the upcoming election. But the problem that they are faced with is that the current level of interest rates are at an untenable, sustainable rate. Why? Because we have a budget deficit that's, $44 trillion. And so the Treasury Department is responsible for making good, at least servicing the interest on our debt. So as our debt goes up, the payments balloon when you've got interest rates at 4 and 5% as opposed to 2%. And both Powell as well as Treasury Secretary Yellen said that this level is absolutely unsustainable for any continued length of time. So I think that the real headache that the Fed is facing by not reducing their Fed funds rate is that it makes our government have such a more difficult job in just servicing the interest on our national debt, let alone to say that it has been ballooning and continues to grow. So you've got a scenario where our deficit is growing and the cost to service it is increasing. That is the primary problem I think the Treasury and the Fed are facing right now.
I have a solution for it.
All right.
Really simple. We take the president of Argentina, Milei, and we create a new cabinet position called the Department of Slashing Government Spending, useless government spending. And we put him in charge, and he does a Qatar. And within probably a week, he only has to be there for a week, he will have cut so much government spending that we'll have a surplus, and we'll be able to pay our debt down probably in a few years.
Wouldn't that be nice? Huh?
Short of that, I don't see any solutions, because every president wholly embraces inflation and excessive government spending. It doesn't matter what party they're from. There's only one party, incumbency, or the uniparty, and that's that. All right, so tell us, silver. All right, been holding on to my silver for years now, it seems. I'm thinking of melting it down into bullets and becoming a vampire slayer.
That might be a good use for it, because it hasn't really gotten that much more expensive. We're looking at a daily chart. This is in candlestick format of silver. And what you can see is that we had a tremendous rise from about $23 February. And it really surprised me when back towards the middle of May, it rose above $30. It's the first time we've seen that. I think the last time we saw $30 silver was about 2 years ago. But then when you look at $32 silver, it on a technical basis is a very interesting level. And I'll try to show you why if I can get this in here. I'm going to compress this to a weekly chart. And what you can see is all these series of tops that came in 2020. And so a move above this, and this is where it gets interesting, and I'm going to move it to a monthly. No one trades or buys off a monthly, but I'll show you what I'm talking about. And that is this. If silver on a closing basis can move above $32, on a technical basis, you've got really a little bit of resistance at 33, but nothing major till about $40. Silver has been a perplexing precious metal in that it hasn't followed gold. It hasn't followed palladium or platinum. It's been in an isolated world of itself, in that as metals were running to record highs, silver was staying flat. And at the same time, if you read a lot of articles and events that came out in the media, they were talking about silver shortages and
squeezes.
All these pundits and I think salesmen really that were saying, it's not if, but when silver going back to 50. Well, when it hasn't shown us historically that has happened. And so if you can see on this monthly chart, it's really back in 2014, 13, and 12. And that was the last time silver really hit a high that was an all-time record high. And so because of that, a break and a close above 32 could be really significant and could signal a challenge of those prices back 10 years ago.
Yeah, so one thing that a lot of people mistake the psychological number for the technical number. The psychological number is the whole number, $30. And everyone thought happy days are here again. But the technical number is what you've got there, 32, 33, around there. Right. But, based on what you're seeing here, the chart looks pretty good. It looks like it's forming a cup with a handle, doesn't it?
Well, on that, let's take it back to a daily, because I just had to compress it so we could get a strong idea. What I'm seeing is we hit this top at 33. This is back at the end of May. Mm-hmm. Traded down to about 23. And then over the last couple of days, we've seen some real strength and support come in right around 29. There's resistance right below today's move on this daily chart. Of course, we have a shortened trading week with Independence Day being celebrated later this week. So my sense is that we need to see silver challenge and trade above 32. And I believe that is highly possible if gold trades to a new record high. And I think that is inevitable once the Federal Reserve begins rate cuts.
Yeah. And it's leading up to the rate cuts where everyone knows it's going to happen, and they're just waiting for them to pull the trigger. That could set it off too.
Absolutely.
All right. Anything else we need to be looking at here?
Those are the two things I'm focusing on. I mean,
what about interest rates? Interest rates, you track it separately because the metals are somewhat dependent upon them.
Well, I am firmly of the conviction, and history's kind of proven out that lower interest rates bodes really well for gold, not so much as an inflation hedge, but the fact that now it has less competition against fixed incomes become less attractive. Mm-hmm. When you can make 4 and 5% in a fixed guaranteed income, the speculative nature of gold that doesn't yield interest isn't all that attractive, or isn't as attractive, I should say. When returns go down to 2%, or we can recall the days just a few years ago when, if you got 0.5% in a CD, that was a good return. When you have low interest rates, gold becomes a lot more attractive and the allure becomes more present.
Hey, so Gary, if you had $250,000 that somebody just dropped on your desk today, what would you do with it?
I'd put a good portion in the precious metals long term. They're high now. I'd look to buy the dips. But the fact that gold has held on to 2,300, if you recall, think about when gold traded to its first big record high, middle of 2011. When it did that, it dropped to 1,800 and then traded between 1,800 and 1,500 for a while, and then spiked down to 1,000. So far, we haven't seen that. We have not seen the kind of correction that followed the last all-time record high in the middle of 2011. So I would have a portion allocated to that. There, in terms of equities, it's not a stock market. My mentor taught me one time it's a market of stocks. There are some out there that I like. They might be oversold, like NVIDIA, but I think their technology is unique and no one competes with them. And so I would look to that.
The moat. They got the moat.
Yeah, I think the precious metals are going to provide long-term stability and opportunity in the next, say, 3 to 5 years.
Okay. Hey, as a financial guy looking at AI, what are your thoughts?
Marvelous. It is a disruptive, transformative technology that will reshape the world as we know it. I mean, the use of the chatbots and AI is pretty much mixed into everything in every large company, whether it's Facebook, Google, all of the big ones, Apple. They're all implementing and integrating AI into their platforms.
Yeah.
And so it's become readily available to those that are somewhat savvy and those that are novices to be able to polish a report by plugging it into ChatGPT or into Claude, which is one that I happen to favor, and having it polish that within 30 or 40 seconds. It sure beats the days of Grammarly and the days of spell checks. I mean, it's transformed the ability to come out with a highly refined article that takes your thoughts and doesn't change them if you put the prompts in properly, but organize it in such a way that you're always putting your best foot forward. It is going to revolutionize so many components and so many industries that when we look back to 2024 and 25, 5 years, 8 years from now, we are going to realize that this was that pivotal moment in which AI began to infuse itself into the everyday lives of working class and working Americans, I should say, because it enables us to do so much more work, so much quicker, and have a much more effective tool at whether your medium is speaking, writing, any vocation that you have. You can really enhance it by the proper use of AI. Now, there's dangers with that, but we'll have to see how those pan out.
All right. I'm totally agreeing with you. I don't like to just use it to generate stuff, but when I have stuff already that I could plug into it, it could be a nice place to start. I'd never kind of just use it verbatim. I don't trust it that much, and it's definitely has a political skew because I like to be sarcastic. I put into the thing, the current occupant of the White House, like without getting political, his 3 top accomplishments. Number 1, ending a useless war in Afghanistan, a 20-year war, and bringing home the troops in a week. Number 2 was solving the labor shortage that was caused by the pandemic and opening up the border to get all those new workers. And number 3 was curing the hotel shortage with all the newcomers. And the thing put together, I'm laughing hysterically at it because those are 3 things that are very negative. I agree that the war needed to end. Who shouldn't have been there? Nation building, all that. Totally agree, but a little more orderly maybe. And, legal immigration. But this thing was lauding the policies that they were the greatest things that ever happened, So anything political, my point is, keep it away from the AI. We don't need it. We don't want it. But these journalists, these people parading as journalists. Well, hey, we don't really need them anyway, so just give it over to ChatGPT and let that run with it, right?
Well, I agree with you. I would not trust it in any way to just do something for me. If I write a think piece or an article, I will put it in on occasion into one of the AI platforms, but I go, use every fact and detail that I presented. Do not omit anything. Don't add anything, but polish and rewrite it.
Exactly.
I found that then it really does a better job than, say, Grammarly or something else.
Oh, yeah.
Not to spell check, but to order the way your article is laid out. But you have to tell it, use every fact, use every number, use every detail. Don't omit and don't add. And then you can get something that is truly more polished than what you put in without what they call hallucinations. If you ask, write an article on where you think gold is going, the next 3 months, Lord knows you can get anything. And if you ask it the same question 10 times, you'll get 10 completely different answers. So in that way, it's not laughable, but it doesn't have the kind of benefits that it does if properly utilized. The idea of text to video just amazes me, what you can publish and what kind of video you can create by old man sipping a bowl of soup in an urban city. And it comes out with these breathtaking videos. So there's definitely a transformation taking on.
Totally agree with you. It's, I don't trust it, but like writing show notes and then reviewing them. I mean, I can tell when stuff's written by AI and, because eventually this isn't real and I just stop listening or reading. But when you write your own material and then you tell it to clean it up and don't cut anything out, it can really do an admirable job and save you a lot of time. Look, I was paying somebody.
Yes.
Yeah. I was paying somebody $20-$30 an hour to write my show notes. And, I do a lot of content. And she was a great writer, really polished, but she didn't really understand what I did. And, then Zoom has an app called the read.ai. So I got that and it would take notes and it was pretty darn good. I take those notes, I make changes, I throw them into ChatGPT or one of the others, and it comes up with really good work. But it's like, it'll say, in this insightful interview, Kerry, Lutz, and Gary Wagner. It's just like predictable with these platitudes and stuff. So you have to cut them out. But, outside of that, it's a time saver. I think, Gary, like when we hit like the 90s, basically, I think the economy was headed for a real crash. And then the internet came, and I thought it really saved us. Then the internet crashed the stocks, but then, we moved on from there. We had the war economy, everything else. But now I think we're in a similar position. The economy is headed for an implosion, but AI, I think, has the potential. I'm not fully convinced, has the potential to really change things around.
Unquestionably, it will. The way I look at someone like myself and to a degree they're going to have AI is going to be able to at some point come close to duplicating what we do, but they won't be able to duplicate our take and our thoughts and our outlook on something. The one thing AI can do, and I'll leave this as a last kind of thought. I remember doing lectures in Indonesia, and I had a translator because there's not many English-speaking people there. And the translator was hard-pressed if I used something like a stochastic oscillator, any technical jargon that a market technician would use, they fell apart.
It was lost.
It was just, they were lost. AI knows how to deal with any modality, whether it's medical, health, insurance, analysis. It knows the subtleties and the word tracks and specific vocabulary to those vocations. And that's something that amazes me.
The same here. I agree. So go over to Gary's site. It's still written by a human being, thegoldforecast.com. And if you've got a question for Gary, myself, the email address is kl@kerrylutz.com. And the link to Gary's site is in the show notes to this interview on financialsurvivalnetwork.com. So go there, sign up for your free newsletter. Gary, always a pleasure. Great reconnecting. We'll talk to you again real soon.
Absolutely. Thanks for having me. Bye-bye.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.